Hi candidates, welcome to another session of manifested online classes. So in this session, I want us to continue with the topic of operating segment under IFRS 8. So in the previous two sessions on this topic, we defined what is an operating segment. We also looked on the various criteria for identifying a reportable segment. And also we did an illustration question from the past paper whereby the examiner was requiring the candidates to identify the reportable segments and the non-reportable segments. So in this session, I want us to be wind up with that particular topic by looking on how a segment report is prepared in accordance with the IFRS 8, and then from there we do an illustration question. So how is a segment report prepared? And even before you look on the format, it is important to note what we said. We have already said in our previous session, this segment report is prepared by companies which are operating in different geographical areas, or basically companies which are providing various services, or a company dealing with various product. And therefore we said a segment report is prepared to provide information about those particular products, about those particular services, or maybe information about the various branches of the company, which will help the shareholders of the company to be able to understand how the figures which are included in the financial statement were arrived at. So therefore, let's look on that particular or how we prepare a segment report. So let's have that particular format here. Format of a segment report. So in preparing this report, first of all, we have the details column and columns of various segments. Let's assume a company is having a various segment A, segment B, and also segment C, and which happens now to be the products of this company. Assuming this company is producing and also selling three product segment, that is product A, B, and C, and which have been identified now to be the reportable segment. So we have columns for three segments. Then we have an additional column here, which is elimination column. And this elimination column is for eliminating any intersegment transaction, meaning that all the intersegment transaction do not go to the last column, which is the total or the consolidated column. So what we start with, or we always start by recording the revenue of the segment, of which this revenue can either be external or internal, of which the internal revenue, this in other terms known as the intersegment revenue. So we record that particular revenue here, both internal and external for each segment. And then we get the total external revenue, which we take to the last column. And then equally we get the total internal revenue. We eliminate it here, such that once we add across, these internal segment revenue will not be reflected in the consolidated, or basically the total column. And then from there, what we do is that we record the total or basically we get the total revenue for each segment, which include both internal and and external. So we come and we eliminate now the internal revenue, such that what we have now in that last column only comprises of the external revenue. So then from there we proceed and record various items of incomes and expenses. So those items include interest and other incomes, and because these are basically items of, or these are items of incomes, we record them here as positive. Then from there we also record the interest expense. Interest expense in other terms is also known as the finance cost. And finance cost, take into account this is a cost or is an expense. We record it here as a negative. We get the total, we take it to the last column, and also we record information about the depreciation on PPE and also amortization of intangible assets. Still, these are costs. We record the depreciation amortization for each segment as a negative, and then we get the total, we take it to the last column. So next, after recording those items of incomes and expenses, we proceed and record information about the segment profit, segment profit. So of which this particular profit of this segment comprises of a profit from both the external and internal revenue. So what we do in the elimination column here, we eliminate something called the inter-segment profit. So what we eliminate here is the inter-segment profit. Inter-segment profit. Inter-segment profit is a profit of a segment from the resulting from internal revenue, resulting from inter-segment revenue. So we eliminate that there such that whatever you take in the last column will only be the segment profit from external revenue. And then equally in this case, you may be given some unallocated incomes and unallocated expenses. So first of all, to this we come and we add unallocated incomes. So unallocated incomes, these are those particular incomes of this company, but which have not been identified with any segment. So take it to the last column there in the consolidated column, and then to this we also less unallocated expenses. Unallocated expenses, these are basically the expenses of the segments, or basically the expenses of this company, but equally not identified with a particular what? Segment, with a particular segment. So, and then we get now the final adjusted profit. So next, we record information about the segment assets. So we record information about the segment assets here. Asset of each segment. Get the total, take it to the last column. Take it to the last column, and then to this we also add unallocated assets. So unallocated assets, equally these are those assets not identified with a particular segment. Not identified with a particular segment. And we get the total here. We get the total here, which now will be, which is known as consolidated assets. Consolidated assets. And finally, we record information about the segment liabilities. Segment liabilities, where we record liabilities of each segment here. Liabilities of each segment. We get the total. We take that now to the last word, to the last column there, to the last column, and finally we add the unallocated liabilities. Unallocated liabilities automatically are those particular liabilities equally not identified with any particular segment. And unallocated liabilities and we get the total here, which will be the consolidated what? Liabilities. So basically that is a format which is used to present, or basically to prepare what is known as a segment what? Report. Yes. So I think that is the format, and I think with that particular knowledge, we can now proceed and look on an illustration question regarding the preparation of a segment report. So we go through the illustration, we see what we are told. So the illustration reads, the following information was obtained from the financial records of a Super Food Group for the year which ended 31st of October 2017. We have the consolidated income statement whereby we have the incomes which include, or the revenue which includes sales of goods, service revenue, rental income, and then we have the total revenue. We have the cost of sales, gross profit, other income, selling and distribution cost. Then we have administrative expenses, other expenses. We have the operating profit, finance revenue, finance cost, and then we have the share of associate profit. We have profit before tax, tax expense, and then we have the profit after tax for the year. Then we have the consolidated statement of financial position as at 31st of October 2017, where we have non-current asset which comprise of PP, investment property, intangible asset, investment in associate, available for sale investment, deferred tax asset, and then we have current asset which comprises of inventories, trade and other receivables, derivative financial instruments, cash and cash deposits, and then under equity we have issued share capital, retained earnings. Under non-current liabilities, we have interest-bearing loans and borrowing, convertible preference shares, employees, benefit liabilities, deferred tax liability. Under current liabilities, we have trade and other payables, interest-bearing loans and borrowing, income tax payable, provisions, and other what? Liabilities. So we have that information, and then we have some additional information, and we are told for management purpose, the business is organized into 5 operating segments, which include retail, catering, manufacturing, publishing, and others. Number 2, we are told details for operating segments are provided below. So we have the total revenue for each segment. We have inter-segment revenue. We have operating profit. And then we have segment asset and liabilities. And then finally, we have the inter-segment profit, which amounted to 4,223,000. So what was required in that case, or in that question? So we are required to prepare a segment report as far as the information provided above allows, in accordance with IFRS 8, which governs now the operating the operating segment. So let's prepare that particular segment report. So the first thing we need to have here is the title. So the name of this company is Superfood Group. So Super Food Group. This is a segment report. Segment report for the year which ended 31st of October 2017. 2017. Yes, so always we have the details column here. Then we have columns equal to the number of segments, and then 2 additional columns, elimination column and the total column. So we leave now the column whereby we're going to record the details. And then if we go to the additional information number 1, we are told the management of this company has identified the businesses of this company to be segment. And basically, you're told this company has a number of businesses, which include retail, catering, and so on. So therefore, we have those as our segment here. The first segment is retail. And it's also important to note that all our figures would be in thousands of shillings. So then from there, we have catering. Catering. Then we have manufacturing. Manufacturing. We have publishing. Publishing. Publishing, and then we also have we have others. We have others. Then after having now our segment here, because we have 5 segments, we have 5 column for our 5 segment. The next we have the elimination. The elimination column. And finally we have the consolidated. the consolidated or the total column. Yes. So basically those are the number of columns which you're going to have. Then what do we start with here? We always start by recording the revenue. The revenue where we record both external revenue and internal. Internal is also known as the inter-segment revenue. Inter-segment revenue. And after adding these two, we are going to have the total revenue. After adding the external and also inter-segment revenue, we have what? The total. Now, if you go back to the information, we go back to the addition information number 2, we are given the revenue for segment there. First of all, we have the total, and then we have what? The inter-segment. So let's first of all record the inter-segment because this is given. For the first segment is 0. The other one is 74.65. For the other one is 36. 791. For publishing, this one is 0, and then others is 56.63. And basically this one we are going to get the total we recorded here as a negative, meaning that that is not taken to the consolidated or the total column. And then we have now the total segment for each. We have the total revenue for each segment. So this one is 129,842. Then for the other segment is 66,853. Then here we have what? We have 39,495. Then we have for publishing we have 32,306. And then we have 37,447. Yes. So then what we need to do, we need to get now the external revenue. So how do we get the external revenue? So to get the external revenue, this is very simple because we know that in terms of how we get this total revenue, we take the external revenue plus inter-segment revenue. So basically what that means is that for us to compute the external revenue which are not given, we take the total revenue minus what? The inter-segment revenue. That will give us the external what? Revenue. So for the first segment, because here we don't have inter-segment or internal revenue, meaning that the full amount of 129,842, this is what? This is the external revenue. What about the other segment that is catering? We take the total revenue minus what? The internal or the inter-segment revenue. So the difference automatically will be what? Will be external revenue. So 66,853 minus 74.65. So this will give us 59,388. So we do the same here. We have 39,495 minus 36,791, and this will give us 27,04. The same case here, because we don't have inter-segment revenue, automatically the full amount of 32,306. This is what? This is external. What about this one? Yes, so that figure is 56.63. So we get the difference between those two figures, which will give us the external revenue. That is 447 minus 56.63, which will give us 31,784. Yes. And then what we need to do is we get the total external revenue. We take it to the last column. But the total inter-segment revenue, we come and we record it here as an elimination. So the reason why we record it, we eliminate it here, is that is because this particular amount should not be taken to the total or consolidated what? Column. Any internal transaction should not appear in the last column there. So let's first of all get the total external revenue. We have 129,842 plus 59,388. 59,388 plus 27,04 plus 32,306 plus 31,784. So which will give us a total of 256,024. And basically that will be our total down here, 256,024. And then let's get the intersegment revenue or the internal revenue. So we have 74,65 plus 36,781 plus 56,63. So that will give us a total of 49,919. And basically I've said we record there as an elimination such that that will not be taken to the last column. Yes. So that is basically the first thing we do to record now the revenue of each segment, which must be split into two, external and intersegment revenue. Basically what that means is that if we go back to the information which we have at the paragraph 1, you can see we are given the revenue of this company. So that revenue of the company, the total revenue of this company from its consolidated income statement is a figure of 256,024. 256,024. So in terms of how that revenue was generated, basically that revenue was generated now from this 5 segment: retail, catering, manufacturing, publishing, and also others. And actually from the information we have in our segment report, you can be able to see retail is the one which generated a lot of what? Revenue. So this particular information is very important to the shareholders, is very important to the management of the company, because they can be able to know how the figures which are included in the financial statement were arrived at. Now, after recording this particular information about revenue, then next I've said we record information about the interest and other incomes. The interest and other incomes. But if you check on the information which you're given in this particular question here, the examiner has not given us any information about the interest and other incomes of individual segment. And that's why if you go to the requirement of this particular question, the examiner was requiring we prepare the segment report as far as the information provided above will do what? Will allow. So basically, some of these particular items are not what? Given. But remember, if we are given the interest and other incomes, we come and record that here. And also we record things like the interest expense, which is also known as the finance cost. And basically, equally, we are not given this particular what? Information. We are not given that information. So next, we record information about what? Depreciation and amortization. Equally, we are not given this information. We are not given the depreciation and amortization of each what? Segment. But if we are given those particular items, we come and we record them there. And then next, what we do, we record information about the segment what? Profit. And that information is given to us. In the additional information number 2, we are given the operating profit of each segment. For the first segment is 68.87. For the other one is 47.16. For the other one is 12.83. And then we have 11.69. And then we have 32.84. So remember, this particular profit by segment is the profit generated from external and internal or intersegment revenue. And therefore, in the elimination column here, always, we eliminate the total intersegment profit. And that's why if you go to the additional information number 3, you will see that you're given the intersegment profit of 42.23. 42.23. So basically that should be eliminated there, because this comprises of the revenue from internal and external revenue. So we have 68.87 plus 47.16 plus 12.83 plus 11.69 plus 32.84 minus 42.23. So this will give us now a figure of 13,116. Equally, we have said that if you're given some unallocated incomes, unallocated expenses, we come and we adjust them in our profit there. For example, we have said we add any unallocated income, any income by this company which is not identified with a particular segment, of which, because this is not identified with a particular segment, we take it to the last column, of which still in this question there is nowhere we are given anything to do with, or we are not given unallocated what? Incomes, and then next we less unallocated expenses. Unallocated expenses, and equally in this question here, there is nowhere we are given any unallocated what? Expense. So basically that means that the final figure for the profit is 13,116. And actually, if now you go to the income statement of this particular group, you should be able to see such a profit. Yes. So the profit before tax of this group from the income statement given at a paragraph 1, that figure is 13,116. So that, or this profit, this is how it was generated by those segments. And then after doing that, next we record information about the segment assets. Segment assets. Are we given information about the segment asset? Yes. In the addition information number 2, basically part C. So the asset for the first segment we have 50, 152. Catering we have 45, 145. Then we have 24, 620. We have 14, 165. And then we have 23, 829. And then what we need to do, we get the total, and then to this we add an allocated asset. So there is something which is known as investment in associate. So that investment in associate, this is a good example of what we refer as unallocated what? Unallocated assets. Unallocated assets, and that is a figure of 764, and we are going to have something called the consolidated what? Asset. So let's add these particular figures here. We have 50, 152 plus 45, 145 plus 24, 620 plus 14, 165 plus 23, 829, which will give us 157, 911 plus now the unallocated assets 764, which will give us total assets or consolidated asset of 158, 675. And basically this also should correspond with the total asset given in the statement of financial position. Yes, 158, 6 what? 75. Finally, we record information about the segment liabilities. So let's record the segment liabilities. Segment liabilities. So the segment liabilities, we are given that information in the addition information number 2, part C. So the liabilities of the first segment given as 14, 839. Then we have 97, 83. 83. Then we have 36, 09. We have 4704, and then for others we have 34, 175. So basically what we need to do, we get the total, we take that now to the last column, to the last column, and then equally to this we add unallocated liabilities. Unallocated liabilities, these are liabilities not identified with a particular what? Segment. And in our case, we don't have unallocated liability. We don't have any unallocated liability. So what we need to do is to get the total segment liabilities. So let's get the total segment liabilities. Have 14,839 plus 97,83 plus 36,09 plus 47,04 04 plus 34,175. So which will give us 67,110. So mean that the consolidated liabilities remain the same. 67 what? 110. 67, 110. So these are the consolidated liabilities. The consolidated what? Liabilities. So basically that is it. That what was required as far as that particular question was concerned. The preparation of a segment report in compliance with the IFRS what? 8. And basically that brings us now to the end of that particular topic to do with the operating segment. We have been able to cover a number of concepts. One, we defined what is an operating segment at the IFRS 8. We looked on the criteria of identifying the reportable segment. We also looked on, we have looked on the disclosure requirements, the information to be disclosed as far as each reportable segment is concerned. And also here what we have done, we have looked on how to prepare segment report, the format, and also we have looked on an illustration question. So therefore that brings us to the end of that particular topic. See you in the next session as we look on our next topic. So for now, kwaheri.